back to Bit About Crypto. I'm your host, David James, the Job Whisperer, and I'm here with my co-host, the infamous robo-recruiter, Dave Hampton.
Morning, everyone. How's everyone doing?
Yeah, we're really glad to be here. A lot of exciting things. So, thank you for all the nice compliments everybody's been sending me. I really didn't think this was going to get so popular so fast, but I guess there's a market. I mean, everybody wants a job, and everybody wants a job in crypto. And because it's sound money, it's real money, and the world is moving that way. So, as you guys know, we own Blockchain Recruiters, and that means we recruit in the blockchain space. So, if you're somebody who's got a blockchain project or a Bitcoin project or Ethereum project, and you need any type of talent, we aggregate those types of people. And if you're thinking to yourself, I want a job in crypto and my skills are transferable, then we want to know about you too, because it's a new space and we want to be part of that new frontier because it's clearly changing the face of the job market. And I don't want to be left out. You don't want to be left out. And crypto is part of that revolution. So today we have a very, very special guest. And I know everybody always says on every podcast it's a very, very special guest. But this is like one of my most favoriteest friends. He's one of my actual best friends. Actually, three of my best friends are in this room. I mean, with me right now. And Jim, you actually are in that population. So it's Uncle Jim we're going to call you, right? Because we don't want to just give out too much information because the man is out there. So so it was from Jim who in 2000, so we've been friends for 30 years. And I'm going to talk about our past together. You know, when I was a young recruiter placing auditors, Jim was one of the first guys I spoke to. He says, I'm an auditor, and he was working for Motorola. And he had a past working for Arthur Andersen before they did such good work for Enron. And he actually had a degree in international management from Thunderbird, the School of International Management there in Glendale, Arizona. And I used to go and recruit auditors there who could speak a foreign language. So Jim and I, we were kibitz and we'd have camaraderie. And I remember it was 1981 and he said to me, he says, hey man, have you heard about this new thing called email? I said, what's that? And he walked me through how to get an Earthlink account. And it was from Jim I got my very first email. Right. And, you know, he's 2 years older than me. So I've always looked to him as my older brother, and he's mentored me on so many ways. And we maintained just a strong friendship where he was a candidate, that he was a hiring authority, that he was a candidate of mine. And we got very close. And then in 2013, as our friendship strengthened, he said, hey, have you heard about this thing called Bitcoin? And I said, what's that? So Uncle Jim is an uncle in so many ways. He got me into Bitcoin, and I am forever grateful for that. I am. And so with no further ado, Uncle Jim, how are you?
Hey, great. How are you guys doing? Thanks for having me. And appreciate the kind words, David. The feeling is mutual. In fact, one other little tidbit there, it wasn't until about 2016 or 17 that we actually met in person, right?
Oh, that's right. Yeah, you were up at on that conference, and I drove up to Palos Verdes to meet you at the Pho place, right? Because you love the Asian food. Yeah, that's right.
Yeah, that's right. So we had, kept, we have a lot of common interests, both interested in history and
Civil War. Yeah.
So had a lot to talk about over the phone for 20 some years.
27 years. 27 years, right.
So it's great to be here, guys. Happy to be here.
Yeah, we never had met in person, and I'd hired people from him. I'd sent him on interviews, et cetera, in multiple iterations of his life and mine. And we kind of we were in between jobs, both of us, and we started a Bitcoin business. We went into business together, right? And we actually started a partnership. But then he said, "Hey, I got a job." I said, "Hey, I got a job too." So it's like we both went separate directions, right? But we'd always talk.
Yeah. Oh yeah, kind of the necessity meets reality kind of thing. We always had, when I first got into really Bitcoin first heard about it in 2011, and bought my first Bitcoins in 2012, back when it was around $11. And a lot of people say, oh, I wish I would have bought, a ton of Bitcoin back then. But, back then it was nobody knew what we know now. And so it was, people were testing it out more as a medium exchange and just experimenting with it. I got into a bunch of other projects, and like a lot of people do. And David and I would, after I first mentioned it to David, we thought, well, maybe we ought to start a business with this. So we came up with some ideas, and then, the rent comes due, and have to go chase another dollar sign for a couple of years.
Yeah.
So,
Wait, hold on a second. So we could get paid in this, right? Right.
Right.
And what do we call this today? The dirty what?
Dirty fiat.
The dirty fiat. Here, I got something else that you gotta appreciate. I don't know if you can see this, right? But this is iconic for our show. This is what we use. If somebody's talking about the Fed or money printing, right? We've got that. We got it all, kids, right? Yeah. So
Zimbabwe, $100 trillion.
yeah, there's a brother who's down with the struggle. He knows the struggle. Yeah, and keep going.
Yeah.
My impatience got the best of me, and you were saying.
No, I mean, it's, I was sort of a student of I guess I kind of grew up with independent, and I always had sort of a rebelled against authority, for lack of a better way to say that. And I've moved around quite a bit in my career, and in between, professional gigs or whatever, I would spend a lot of time trying to learn just how things work, whether that's investing or trying to understand money. And it was, after I came back from China in the late 90s, and we had that big run up in the late 90s, and I got stung pretty bad in the tech meltdown of 2000, and really started studying kind of the cause and effect of all that, and really just trying to understand what is money. And so I had a little bit of a head start. It wasn't like I just saw this Bitcoin thing and thought it looked pretty cool or whatever. I was already pretty far down the rabbit hole of sound money, and knew what the Fed was and what central banks do, and how inflation is really just another tax on the citizens. It's an easy tax for them to impose, and started looking for ways, other than Bitcoin hadn't been invented yet. So looking for ways to, escape the inflation tax. And, so I had gone into precious metals and things like that to some degree. And so when Max Kaiser actually started talking about Bitcoin, I think in 2011, and my brother sent me a link to a Max Kaiser episode in 2011. And so kind of like a lot of people, the first time you see it, you go, yeah, that's pretty cool. But I started watching Max Kaiser a little bit more. So I would say he was really the one that got me down the rabbit hole first. And then in 2012, I found a place where you could meet people just to trade Bitcoin. There were market makers all over by now, and you could meet somebody in a Starbucks and buy $100 worth of Bitcoin. So that's how I got started.
That's interesting. So I think you touched it, but I always want to ask people. So usually the question is how did Bitcoin find you? Right? It's not how you found it. It's how did it find you? And you were very eloquent in talking about that. And so when you first hit and saw and learned about Bitcoin, what was the price when you first heard about it?
Gosh, I don't. The only price I remember is the price it was when I first bought it.
No, that's going to be the second question. Sorry.
It was probably in the single digits. It moved around quite a bit, but it was in single digits.
Like under $10? Under $10?
Under $10.
Yeah, okay, so
sure.
here's the question. So so are you saying that there's a perhaps chance that you have in your life purchased Bitcoin? Has that ever possibly happened or no?
Have I purchased Bitcoin?
Yeah.
Yeah,
Okay.
for sure.
So the first time you purchased it, what was the price?
It was actually, I probably shouldn't, divulge the date, but it was the reason I remember it was November 13th of 2012, and I paid $11.13.
Wow.
Oh, okay. November 13th, and the price was 11.13.
That's the
Wow.
only way I can remember.
How
it.
weird is that?
Wow.
Yeah.
Yeah.
How weird is that? So I first purchased Bitcoin in May of 2013. So yeah, and I didn't get it for that price. No, sir. No, sir. It was 210 when I first got it. And I got it just because I knew that 7 minutes into your diatribe into my ear, I said, I'm buying it. I went out and found a way to buy one.
Right.
And let's talk about that. How we used to have to buy Bitcoin. Okay, I'll just tell my experience. I had to literally I go to this website. It was called Cash for Coins. I think it was Cash for Coins. Was that what it was called? And you would go and you would fill out the paperwork and you would say who you are, and then the guy would give you his Wells Fargo or his Bank of America bank account. And you would have to go to that bank and deposit cash in that bank. Then you would take the receipt, and then you would have to go and make a copy of it and then fax it to the dude, right? Like, talk about just like KGB, clandestine CI. You don't know who this is. It's just pure, unadulterated faith, working without a net, right? And next thing you know is it's like you could look here and you could see where your coins were on the blockchain because there were 0 wallets. Now that's my experience, and that's why I missed out on all the Bitcoin Cash. I know we're talking above everybody's level a little bit because the rule to getting Bitcoin Cash when the Bitcoin blockchain forked was you had to have your Bitcoin in a wallet before December 5th of 2019, I think it was. It's like, I didn't know you had to put it in a wallet to get it. But anyhow, what about you? What about your first getting of Bitcoins in the beginning?
Well, I was kind of lucky because, and we all understand, or a lot of the Bitcoiners now understand that Bitcoin has this halving cycle that occurs roughly every 4 years. And Bitcoin's price has sort of moved in along with this halving cycle. And basically the halving cycle is where the supply gets reduced. The new supply of Bitcoin that goes to the miners every 10 minutes gets reduced by 50% roughly every 4 years. So I was lucky in that when I participated in that first big run up. You mentioned that you didn't get in until it was only 6 or 8 months later, and you had to pay more than 10x.
Yeah, and that's your fault. I thought we were friends. Anyhow, go on.
But, yeah, I didn't even know about the cycles back then, and people really weren't talking about them that much. But for me, there used to be a website called localbitcoins.com. They still exist, although they do business a little bit differently than they used to. You used to be able to find people on Local Bitcoins. They had an escrow service, so you could use Local Bitcoins, but you could also message people offline, and then you could just go meet them and do a over-the-counter transaction with cash. So that's the way I first started buying Bitcoin, was with cash. You could go to meetups in every big city by 2013 was having meetups. And there were a lot of people that were just so passionate about Bitcoin that they would go to these meetups and make a market for people that were new coming in. And so you could bring, 50 or $100 to a meetup, and there'd be 3 or 4 people that, would be happy to sell you Bitcoin for spot right there. So that's the way it was kind of in the early days. And then that next halving cycle occurred sort of, and then the big run up and the fork happened. You mentioned the Bitcoin Cash fork. That happened in July and August of 2017, right before sort of the big speculative mania of that last cycle.
Yeah. So, as you know, our audience, ideally, whatever audience is evolving. But the intention of this podcast was to get an audience that actually has heard about Bitcoin, right, and wants to like possibly get a job in Bitcoin. That's so we're not like the Saifedeans or the Max Kaiser or like the Raoul Pauls or definitely the rabbit hole, talking nodes and mining, but if you were to explain somebody just in a very general way what mining is, I have trouble. I say it's like drilling into a mountain with a computer just using code, right? Just get your share of the bingo balls, right? That's
Right.
how to explain in layman's terms because mining really throws people, and the word coin throws people, and the word token throws people because we think of the physical thing.
Right. Yeah. I mean, I'm not a coder, but I am an accountant, and I understand that what Bitcoin is really, it takes double entry accounting to a whole other level with a time stamped ledger. So it takes a double entry ledger and it turns it into a decentralized time stamped ledger. And what that means is that it's like a truth machine, and the miners are the ones that basically take those transactions every 10 minutes and put them onto the blockchain. And in exchange for arranging those transactions and putting them on the blockchain, the miners get paid, the reward every 10 minutes, basically. So the miners earn money both from the block reward, which will decline eventually to zero, and there are transaction fees.
Can you dumb it down a little bit more? Can you just dumb it down? You're talking to like your aunt at a picnic?
I mean, Bitcoin is really just a decentralized global ledger of transactions, and the miners are the people that basically write those transactions to the ledger, and they secure the network by maintaining that ledger.
Right. So here's another thing I want to talk. Let's talk about. I don't know how we want to go about this. Like, I want to talk about unconfiscatable, right? Because I know that because of the blockchain technology, nobody can take it away. And I'll let you go about this any way you want. So let me just talk for a second. So the thing about when Jim is talking about decentralization, he's talking about that Bitcoin has no corporate office with the receptionists, answering calls saying, "Hello, Bitcoin headquarters. How can I direct your call?" That doesn't exist. Okay, Bitcoin is decentralized, like Alcoholics Anonymous, like Al Qaeda, right?
There's no headquarters essentially.
No, there's
no
not
headquarters. Nowhere you can call. It just exists.
Right, and there's this open source code that has been embraced by all cultures throughout the world. I mean, totally embraced to the point where it can't be shut down. And so it can't be confiscated, right? And it can't be turned off. Right? And that's what people don't understand, right? And there's something that's going on here where people are very, very confused. When Jim and I and Dave, we speak about decentralization and owning cryptocurrency. And in Jim's case, I'm just going to out you, pal. He's a maximalist. He's all about the Bitcoin. That's his coin of choice, right? His drug of choice. His coin of choice is Bitcoin. And as it relates to Bitcoin, right? I know that Jim is about self-custody, and this is where you actually custody the keys and the access to the blockchain yourself. And a lot of these people, they have, I would think 90% of people that actually have any type of cryptocurrency have it on an exchange somewhere like Coinbase or Kraken or Bitfinex, and that's not decentralized, and that can be confiscated, right?
Right.
So why don't you explain the difference? Remember who your audience is.
Yeah, I mean, I'll back up a little bit and just say, I think Bitcoin is really the intersection of cryptography, and I'll talk about that. And that's the private key and public key, economics, and game theory, really. Um, it's a network that was launched into the wild in 2009, and it has aspects. There's different constituents that are all self-motivated to keep this network working. And as David said, there's no headquarters, there's no founder, there's no CEO. The constituents that people usually hear about are miners, but there's also nodes. And a node is, if you want to, Bitcoin is an opt-in network. There are, in addition to the miners that secure the transactions in the network, there are nodes that basically validate those transactions. So it's kind of like a system of government where you have a legislature, a judiciary, and the executive branch, basically. And so you've got the miners that secure the network and add the transactions, and you've got the nodes that basically confirm those transactions. And that's the most decentralized aspect of this. There's 10,000 nodes out there around the world. I run a node myself. And if the miners started issuing transactions that people did not want to validate, all the nodes would say, we don't want to validate those transactions. So it really is an opt-in network. And when you talk about the unconfiscatable nature of Bitcoin, that is related to a couple of things. The most easiest thing to explain is that basically when you purchase Bitcoin, it goes into an account on the ledger. So those funds move from somebody else's account to your account on the ledger. The only person who can spend the Bitcoins associated with your account is the person that controls the private keys that unlock those funds that allow you to send those funds to another account on that ledger. So the unconfiscatable aspect of it really relates to the cryptography, which I just explained. And that cryptography has never been broken in Bitcoin. So if you secure that private key properly, no government, nobody can confiscate those coins. So that's the first aspect of unconfiscatableness, for lack of a better term. The other aspect is, as David mentioned, the decentralized nature of this. So it was launched into the wild. There's 10,000 nodes out there. It can't be decapitated. So if one government bans Bitcoin, the other 160 some governments may welcome Bitcoin. And there are a lot of countries that are way more welcoming to Bitcoin than even the US is, even though a lot of the development work takes place in the US. So when I think about the unconfiscatable nature of Bitcoin, I think about the cryptography, which is it's math, it's thermodynamics, it just can't be broken, as well as the decentralized nature of the network that can't be attacked by a sovereign government.
Hey, so Dave, I'm going to ask you, because I know this from Jim, and I know what he's going to say. But as it relates to your Bitcoin and your possessing of it, right? What's the biggest fear that you actually have?
Well, I mean, if I were to own Bitcoin, I think it would be I think it's the whole idea of IRS trying to take what I've already, potentially I could have bought. That's really what it is. I mean, for me, I mean, I get the whole, we pay X amount of dollars for the government to help with, military, roads, et cetera, but there comes a point where a dollar earned should be 100% capped.
Yeah, well, a dollar should be at least, it should be 70% capped.
Or 90% capped.
Yeah,
I mean, so I mean, to me, the The decentralization idea of Bitcoin, the unconfiscatableness is probably the most appealing. I think the last thing that's appealing, I was talking to my buddy Garrett about it because he's not in it, and is that this transcends or crosses all borders. I mean, this is why I think this is why one of the reasons why governments are trying to get in right now into it, because they want to be able to control it. They want to be able to regulate it. I mean, everything comes back to how they can centralize everything, so you have to depend on them.
And we very much want governments to get into Bitcoin, don't we, Jim? We want them to like put it on the balance sheet, don't we?
Why?
Well,
Jim will tell you. Go ahead, Jim.
yeah, I mean, I guess there's a debate about that, and I think everybody's waiting for the first central bank to announce that they're putting Bitcoin on their balance sheet, just like they do gold and so forth. But back to David's point about when I talk about Bitcoin being unconfiscatable, I want to be clear that most people buy Bitcoin on now, especially on regulated exchanges. And if you buy Bitcoin on a regulated exchange, they have your KYC and AML, which is the banking, know your customer and anti-money laundering rules. They have to abide by those rules. And so if you buy Bitcoin on a regulated exchange, it's almost the same as buying stock with a brokerage. You better be ready to pay tax on the capital gains because the IRS is going to know about it. Just recently, it was announced that the IRS has issued a John Doe summons for all of Kraken's customers that have done more than $20,000 in transactions with Kraken. So I go in with the assumption that when I buy on a regulated exchange, it's really no different than buying a stock, and I will have to pay capital gains when I sell that Bitcoin. So, tax rules and those types of things still apply. However, it can be purchased, what I say, pseudonymously, just like cash, where you can do a over-the-counter transaction with somebody. And as long as your Bitcoins were purchased without KYC and AML, there's a chance that it wouldn't be discovered that those Bitcoins trace back to you. I want to, make no mistake that Bitcoin is a highly regulated asset in the United States.
Absolutely.
And, so it's not like a lot of people discount it because they say, well, it's the Wild West and the government is going to shut it down, et cetera, et cetera. And I really think that is not quite the correct way of looking at it.
I agree.
It's really a highly regulated thing right now.
And about that, it's funny because I wanted to ask you about it, and I read this morning that the IRS will confiscate cryptocurrency to pay for past taxes. And I've also heard that there are people that says, yeah, the U.S. Marshals, actually, the Department of Justice sold Bitcoin that was confiscated, right? And that's not accurate. They confiscated it by way of a plea deal, and the person gave up the keys, right? So they can't just come in and take your Bitcoin like they can your Ferrari, right? It's very different. And so, but when the article came, and they had their own little meeting that's like, hey, how do we get more from the people that actually can afford to pay it? Chat. I was thinking to myself, I wonder what Jim's going to say about how the IRS will take crypto to pay past taxes.
Well, I think, the desire to not spend the rest of your life in a cage is pretty compelling.
I've got that.
It's a pretty big deterrent, yeah.
So, there's a saying in Bitcoin called the $5 wrench attack, right? So that cryptography can't be compromised, but there is such a thing as a $5 wrench attack where if somebody knows you have Bitcoin and you haven't taken the right steps to secure it, they can lock you up and threaten you with a $5 wrench. I think the IRS is probably the most expert at the $5 wrench attack of any entity in the world.
Yeah, the $12 wrench. right?
Right.
It's much bigger, right?
Longer, heavier.
Yeah.
Right.
And really, you don't have to hit with it. You just have to like show what the type of damage. Like there's wrenches, and then there's the wrench, right?
Exactly.
Yeah. It's like Paul Hogan. That's not a knife. Here's a knife.
Yeah, it's the pipe wrench attack.
Right.
Yeah. So this has been absolutely great. Hey, so let's just stop for a second, David. Let's start talking about some of the searches that we're
Okay.
working on.
All right.
So I actually wrote a search the other day for a cryptocurrency fund accountant. And the truth of the matter is, if you've done any type of currency accounting or any type of accounting, you probably qualify for this job. It's in Boca Raton, Florida, and they will relocate. All right. And I don't have the search yet, but I'm going to get it. I'm looking for a writer, right, who can do crypto and alts and collectibles, right? So if you've got a passion for that. So that I don't think that's going to be like exactly a full-time job, but that I've also got a search for an Ethereum developer, and I've got a senior blockchain developer search, right? And the Ethereum developer, you can be anywhere. And the blockchain developer is for a project that's going, it's a great project in Southern California. Also, you want to talk about your searches before we talk about our candidates?
Sure. Yeah, I got a blockchain data engineer. I got quite a bit of engineering jobs that we got.
You like those engineering jobs.
I mean, I think that's the way it's going to work, right? It's just, I think engineers, you need engineers. I think of all the skill sets that are going to transfer from other industries, I think that's the road.
Dude, I think you have emotional crushes on these full stack engineers because you always. Okay,
I mean,
keep going.
All right, I got a crypto developer. You got some transfer.
Where are these jobs located? Make sure you tell people.
So crypto developer. I mean, it says anywhere. Literally, it says anywhere.
Okay, that's what they told you. The person could be remote.
Yeah, remote.
Okay.
Yeah, like it's discussed before. COVID has really changed the
landscape.
of where you need to work versus where you can work, kind of thing.
So I have an institutional sales manager who actually literally has some crypto experience, right? I recruited him, a kid, Steve. I was telling you.
Yeah.
Yeah. Anyhow, and then I also have someone who actually has worked in blockchain, who actually South African guy, got a green card, can work here. He's actually he's head of blockchain and blockchain strategy and security. It's really amazing. I'm starting to find all these people. Right, and and that's also I have another search for a senior investigator, crypto risk, right, for one of the big.
Yeah. That's an interesting role because I think I not that I'm in this world, but I mean forensic accounting I think is probably going to be very apt to be discussed. I think that skill set's going to transfer over.
Yeah,
well.
which brings me to my next question as it involves our guest, right? So Uncle Jim. So Uncle Jim is a he was an auditor for a big back then, and I'll give away his age, a Big 8 accounting firm,
Okay.
right, which became Big 6, then
Right.
became Big
Big
5,
4.
then became Big 4, right? Then he actually pursued his international prowess. He also speaks Chinese, and he went to work for Motorola as an internal auditor.
Mm-hmm.
And then he worked over in China, and then he was the CFO of a voice over protocol division of
VoIP?
VoIP. Next Level Communications, it was called.
Right.
And he was the CFO. I remember I was listening to him on earnings call, and I'd say, my baby, he's grown up so big. I'm so proud of him, right? He went from little auditor to he's the CFO talking to shareholders, right? And then he's had a bunch of money roles, and so he can talk a thing or two about forensic accounting and forensic auditing. So part of this show, really the whole reason about this show is to educate people on Bitcoin. And what I want the show not to be is hey, you should buy this coin. Hey, you should buy that coin. This is for education, for the layman term. Because I found, like the podcast that I listen to, if my wife listens to this, she's not going to keep listening because there's no on ramp for them to really start understanding. I mean, I'm quite committed to my Bitcoin cryptocurrency knowledge addiction, right? It has supplanted. I mean, I'm going to get rid of Sirius Radio, and I'm just going to get rid of iTunes because all I need are podcasts. And I see Jim nodding his head there. But really, what I want you to speak about, either it's your opinion of what you see or what you have seen, how blockchain is changing the job market?
Oh, it's crazy, and I mean, it does remind me of the internet boom in the late '90s a lot. It's where all the smartest people are going. If I was when or if I'm reincarnated, I want to take one of those developer jobs you guys have. No hope for me to do that now because it's harder to teach an old dog like me those new tricks about
Boomer.
Yeah, right. Boomer, Gen X, whatever you want to call it, right on the cusp there. But no, it's crazy. Like I spend a lot of time listening to, as David James said, podcasts and and surfing, the internet, reading stuff like that. And I'm always stumbling on searches. Every one of these companies that is, forging into this new space is just crying for talent. And I think, as David Hampton said, the coders and developers are really, it's like the internet on steroids. Those guys are gonna rule the world here. When the forensics and analytics side, I think is important too. But it's a little bit of an arms race going on right now. There's a few companies that are out there that are trying to reduce the fungibility of Bitcoin, meaning they're trying to separate good actors from bad actors and really make it so that some Bitcoins are whitelisted and some Bitcoins are blacklisted. And they use a lot of this forensics and what they call chain analysis. There are several companies that are getting big money now from agencies like the IRS and so forth that are hiring a lot of those types of people, which is an area that, I personally have a little bit of some of us that like the fungibility or want to strive for more fungibility and privacy, don't want to feed the arms race too much on that side of the equation. But if it's somebody like, a good actor in the space or an exchange or whatever, then I think that's great.
Yeah, so I just want to say this, that in when Jim and I first met back in those dial-up Earthlink days in 1991, 0.5%, Dave, were using the actual internet, right? Less than 1% were using the internet. And today 60% of the world is using the internet, right? Today, less than 1% of the world is using blockchain. Less than 1%, right? So it just shows you where we're going to be. So, Jim, I want to...
and if I could say one thing on that, David, one of my favorite sort of latecomer OGs to this space is Michael Saylor. We've talked about him quite a bit.
Bitcoin Jesus.
Yeah, the later Bitcoin Jesus. The first Bitcoin Jesus, Roger Ver, kind of went off the reservation, but Michael Saylor has really come on strong over the last year. And one of the things, to your point on that, Michael Saylor, he basically says that the network effects for money and value are at least an order of magnitude stronger than the network effects for what drove the internet. So, the companies that were created on the internet, like Google, Apple, Amazon, Facebook, they had very powerful network effects. And that's why, Facebook won over MySpace, Google won over Alta Vista, et cetera. Once they get to a certain size, there's like an event horizon there and nobody can take them down. Michael Saylor is always saying that the network effects with money and value are so much stronger than they were for this communications and internet space that, a lot of people, including me, think that the bonanza of new jobs and so forth coming into cryptocurrency and Bitcoin specifically are going to be way bigger than the internet.
Yeah, and about that, it's just amazing. We started this. We started talking about it, and you know, I'm on Twitter. I'm the BTC Recruiter, at the BTC Recruiter. You guys can find me there if you need candidates, or if you need if you need a job you want to change. You find me at the BTC Recruiter, and it's just, I can't believe how many people on LinkedIn and BTC Recruiter have called me and said, I've got this search. I mean, it's like hitting a fishing hole, and you just can't get the pole in the water fast enough for someone's biting on. The need is so great, and it's changing. It just hasn't quite hit mainstream yet.
Hey, I have a question for you, Jim. That picture frame in your background, what can you tell us what that is, or what that story is?
Yeah, that is the headline in the London Times on January 3rd, 2009. And Satoshi Nakamoto, the pseudonymous inventor or discoverer of Bitcoin, he put the headline of that article into the first Bitcoin block that was ever mined. So that first Bitcoin block that they call the Genesis block has a memo saying Chancellor on brink of second bailout for banks. And that newspaper was dated January 3rd, 2009. And I think he really did it for two reasons. One is that timestamp, anybody can go to the London Times and see that was the headline. So it sort of proves that that first block was dated January 3rd, 2009. And the other reason that he put that in there is that, you know, the origin of Bitcoin and the origin of the whole cypherpunk movement was very interested in a system where central banks can't just bail out companies and debase everybody's time and value through money creation.
Wow.
Interestingly, that I did some searching around, and the original of that newspaper front sheet there trades for upwards of $1 million US, and there's only about 3 or 4 known copies in existence.
Yeah,
Okay.
that's I'm sorry, you're about to say something?
Go ahead.
Yeah, the thing about that is, and that's the next thing that's really important is that, you know, as Max Kaiser talks about, this is important for our listeners, as Max Kaiser talks about, he worked on Wall Street, and what they used to say as it relates to Wall Street, making money, don't worry about any laws. Don't worry about any laws. We'll break them, and we'll get the laws changed, and we'll get everybody forgiven. And that's exactly what happens, because Wall Street puts everybody in office, right? Whether you're Republican, Democrat, whatever, they pay for their best interest. And that's why the good news about Bitcoin actually being proliferated in business by powerhouses like Tesla and Visa and PayPal and Grayscale. These people are going to start paying for politicians. Grayscale just bought into the New York Giants, right? And so basically the Bitcoin influence is good for people who have or are going to have Bitcoin. But what I wanted to say is that, you know, you learn that USB or HBC or JP Morgan, they just do these multi-billion dollar frauds. And what do? They pay a fine of $16 million, right? That's like, that's like going to Starbucks, right? And they'll say that's $6.40, and you give them a 20 and go, yeah, it's all right, you keep it, right? That's right. It's the same amount of pain to one of us, right? That it's like, oh, I forgot my change. It's like, it's that irritating to them, and they know that that's going to be the outcome. Nobody really goes to jail, right? Unless they got to find a sacrificial lamb. So what ended up happening is they said, you know, we can make money on these mortgages that just keep going up, and the only requirement is if you can fog a mirror, you get a loan. So for the first time in the history of America, instead of houses looking for money, we had money looking for houses, right? And what did the government do? The government bailed out the exact criminals that created all the problems. Instead of going and taking all that money and saying, okay, everybody who's upside down one of those mortgages, we're going to pay it off, right? And if they'd have done that, we'd be in a totally different situation. But because of politics and influence and corruption, that's exactly what happened, right? And now we're in the same type of situation, right? Even though this problem wasn't necessarily caused by Wall Street, right? But the Wall Street is capitalizing is when so I'll tell you what happened. In March of 2012, I was about to buy a house. And I said to my wife, we're not buying a house. Because what's going to happen is everybody's going to be out of work and they're going to have to sell their home so they can just survive. And I was so wrong. I was so wrong.
That's
and
when it went right back up.
Yeah, well, what happened was there's this insertion of trillions of dollars into everybody's pocket, and then interest rates were brought down. And to the point where we're doing the exact same thing. Now we've got money, easy money, looking for houses again. As a matter of fact, in Oakland, Alameda County, San Jose, in the Bay Area, houses are going for $1 million over ask. You list a house for $3 million, you get 40 offers, and you take the one that's $1 million. This insanity can't continue. But that goes to the fact, and I want Jim to speak on this. Okay, I'm going to put him up. Give me a closey, Travis. Give me a closey. All right, I've got the $100 trillion bill backed on the good faith of the Bank of Zimbabwe. All right. And of course, I've got this garbage right here, which is American fiat, right? And that goes out. So explain to our audience about, what the Fed is doing, because it was hard for me to understand about how the money printing, eventually this just can't last, and it's diluting everybody's ability to purchase. And why that's good for crypto. I mean, cryptocurrency is going up, up, up. And this is a reflection of it. So please talk on it.
Yeah, I mean, there's been about a 30-year what they would be called a bull market in bonds, because interest rates have been going down, 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 down for 30 years. So even 6 or 8 years ago, if you were lucky enough to save up $1 million for your retirement, you could go invest it risk-free and get $50,000 a year of income off that money. Now, with interest rates being effectively zero, that $1 million that you worked your whole life to save doesn't yield anything for you. And so what they've done is not only have they lowered interest rates to make it so that there is no risk-free yield, they quantitatively increase the money supply to steal, as I mentioned before, people's labor via inflation. Because at the end of the day, inflation is really a monetary phenomenon. They always try to obfuscate that, prices are going up and the evil gas companies are gouging, et cetera, et cetera. But at the end of the day, it really always comes back to that quantitative easing. And who does it punish? It punishes people who save in the sovereign currency, the US dollar, and it punishes workers, and it punishes people who don't have those speculative assets that are, all of that money creation goes into the more speculative assets, which the wealthy are able to capitalize on. So, it used to be where you could save up your currency and, grandma could put her savings into a treasury bond and live, for the rest of her life off that interest. That's gone now. So they've turned us all into speculators. And, Michael Saylor talks about this, converting their $500 million of their corporate treasury felt like he was sitting on a melting ice cube. And he's looking for something that is a strong store of value, and that the central bankers cannot steal from people via, quantitatively increasing the money supply. So, that's a long conversation. We've talked about that quite a bit, David, but that's kind of my take on it. It's sort of a safe haven. It's a lifeboat from a lot of the insanity that we see going on right now.
Yeah, and also, you know, people are our age, and we're at the young spectrum, right? People who are between, you know, that were born between 1935 and 1965. Well, let's call it, right? Boomers, right? They're the ones that actually have had all the wealth, right? The wealth has been passed down to them, right? And everybody, let's go to college, get a good job, buy a house, and you secure your future, right? But
Right.
and the whole go to college and get a loan, it has been a lie to everybody, all kids that are 35 and younger. It's been an absolute lie, because for most, unless you're a doctor or a lawyer or an architect or something where you're going to apply that actual trade with those 4 years or 6 years or whatever it is, you actually now are $100,000 in debt, and you qualify for the job at Starbucks next to the guy or gal who didn't go to college and they got 4 years work experience, and they get more than you because they're your boss, because they got the work experience. I'm making a generalization, but this is why cryptocurrency, these younger kids, they understand this and they see this clearly. Cryptocurrency is their way into investing in an office building. When we were young, we said, hey man, if we could own an office building by the airport, we could be set. That's the way
yeah, real estate was king back then. I mean, it's a physical asset, and this is as close to it's a digital asset in this case, right? I mean, that's really what you guys are saying. It's not physical coins. It's not, but it's something that's tangible, that's increased in value.
Well, if somebody said to me, hey, you can actually get into the Bellagio casino for $10, and that $10 will be $110, right, in a year and a half.
Right.
But that's
Meaning
like
part owner of the Bellagio?
Yeah. That's like buying 10 tokens or 0.0005 Bitcoin or whatever it is. See, that exists for that now. I mean,
the government publishes these inflation statistics that are absolute garbage. And they say that, inflation is running at 2%. We're going to let it get a little bit hot and go up to 3%. All of the things that you want are inflating at 10, 20, now 30% per year.
Right.
What do you want? You want a college education for your kids. You want a beach house in Malibu. You want a nice car. You want a condo. All of the things that you want are inflating at many, many multiples of this bogus CPI that they produce. Now, even food is that over the last year, food is inflated by like 20%.
Yeah, definitely.
So, it really is. I think that's what a lot of people like me hope, that Bitcoin can sort of retain its roots of, being a sound money, and it's the only asset in world history, in the universe, that is provably scarce, and its quantity is fixed. Even gold, which I'm a big fan of precious metals also, but even gold, when the price of gold goes up, the miners get all geared up and the quantity then increases quite a bit, and then that stabilizes the price increase.
And we're talking about gold miners, just for the sake of our audience. We're talking about miners,
yes, correct,
drills in the ground, right? Got it.
Right.
Yeah.
Pretty much every other asset, as the price goes up, people race to supply more quantity.
Yeah, but with Bitcoin, if I understand correctly, because of the halving, you're not able to, even the same amount of work that you were doing previously isn't going to yield the same amount of results that you were doing before, right? That's the difference between the mining of gold and the mining of Bitcoin or Ethereum, whatever that is.
That's correct? Right.
Okay.
Yeah.
Yeah, so I want a last topic that I actually want to. Well, I got two last topics I want to touch about. But so let's talk about gold and silver, right? And it used to be that when the dollar was bad, precious metals like gold and silver would go high, right? And when the dollar was good, then precious metals would go down, right? Not to mention the fact that gold is totally fabricated, manipulated, suppressed markets by places like by banksters,
fake ETFs,
all that stuff. So, but let's talk about where people that believe in Bitcoin and crypto and people that believe in gold and silver, precious metals, where they don't necessarily, they're kind of aligned. They kind of stand together as far as what it is as it relates to a store of value and a security, right? So let's...
Absolutely. I think there's there's a 90% overlap between the reasons to own precious metals and the reasons to own Bitcoin. There's you see a lot of infighting, but it's really, intra-tribal warfare between the gold bugs and the Bitcoin maximalists, basically. And I'm probably a little bit more allocated toward Bitcoin than I am precious metals, but I see
just based on the price of how far it's gone up, right? It forced your over allocation, right? Because it went up by 1,000% or whatever it is in the period of time. Yeah, go ahead, Jim.
Yeah, but the thing that happened with gold is the Achilles heel of gold was that it was allowed to be centralized, and most people don't want to be bothered by holding their own physical. And whenever you centralize something, the banker's business model is to sell stuff they don't own and to lease it out. And you have all these shenanigans going on. It's the eternal business model of whenever you centralize anything, it's going to get corrupted. And there's the beautiful thing about Bitcoin is that it's really easy to own where you custody your own funds. In fact, I think it's probably easier to custody your own funds than it is to keep it even on the exchange. And it's, orders of magnitude more secure. That lends to the decentralized aspect of it. Although, again, going back to kind of how I hope Bitcoin preserves some of its roots here is that, the banks are now wanting to get into Bitcoin in a big way. And people may just decide to custody their Bitcoin with the banks. And, if that happens in a really big way, there might be some risk that Bitcoin starts to get rehypothecated.
Explain what that is. Explain what that is. Explain
rehypothecated is basically just selling stuff that you don't own. So if a warehouse has gold receipts of, let's say they have 1,000 gold bars, but they issue gold receipts for 5,000, knowing that only 1 in 5 is going to want to redeem, their gold. So what it does is it puts artificial supply on the market and dampens the price.
Yeah, did you read that the Bank of England actually had to restate their numbers and they were only off by 3 million bars or something?
I read that. Yeah,
something like that. Right, because it's like we don't even care how good our ledger is because it's all made. I want to ask.
It's a shell game, is what it is, right? I mean, it's completely a shell game.
Absolutely, David. Absolutely. So I want to talk about the current state of where we are in spring of 2021. And the financial money printing. Actually, I want to say something. So somebody recently said to me a few weeks back that Joe Biden just passed the law that you have to pay 40% capital gains taxes. And it's funny how this is being passed because Joe Biden's not capable, as president, he's not capable of passing any law. He's only capable of signing a bill into law, right? And you got to get 500 people who chronically disagree and bicker to come to terms and pass in two separate bodies. And but the reason I'm talking about this is that the money printing and the more stimulus and, at the time of this podcast, they're still talking about getting another $2 trillion, into the masses, and wherever that goes, that's not the whole point of the show. How do you think it ends? I mean, just give me your sci-fi prediction on where we are with all this cash. And you can go as dark as, I'm concerned about commodities going up and violence when people can't get enough to eat.
Right.
Right. So talk about how you think it's going to end, man.
Yeah, I mean, I think we've been preparing for this we've seen a lot of signals along the way. Even going back to, and I don't want to spend a ton of time on this, but in 1933, FDR outlawed gold ownership because he didn't want people to be able to store their labor in something that would hold its value. That was not repealed until like 1975. Believe it or not, you were not able to own gold bullion legally between 33 and 75. So and then in 1971, Nixon closed the Bretton Woods system, which basically backed all of the global currencies by the dollar, which in turn was backed by gold. And so there's a website called WTF happened in 1971 that shows actually there was an inflection in 1971 in practically every economic metric that you can look at, productivity, et cetera, that shows we started going off the rails in the early 70s when we delinked the dollar entirely to gold. And then obviously, we had the 2008, and that's when I really kind of woke up and said, this is going to get crazy here. And now I think we're just in complete hyper mode here. I don't know if it's going to be hyperinflation. It's definitely going to be stronger inflation than I think, any of the authorities are predicting. So, I guess what that means is you try to keep your assets in something that isn't a US dollar account, basically.
You got it.
Stocks will do well. They typically do well in the early periods of really high inflation. You don't want to own bonds because I think they're going to keep interest rates very low or negative. So that the 30-year bond market is over, basically.
Yeah.
And like we've talked about, real estate, and then precious metals and Bitcoin. I am sort of a maximalist. I have played around with a lot of the other coins, but I think for a store of value and protection of your labor, it's probably it's definitely the paramount cryptocurrency for that.
You're saying Bitcoin is?
Yes. Yeah.
So were you gonna say something? No. Yeah. So I want to ask you this. Okay. So in spring of 2022, 12 months from where we are right now, what do you think the price of Bitcoin will be?
Oh my gosh.
Yeah. Yeah. Right.
So, I think that the cycle, this 4-year cycle, if you believe in this halving cycle, it would sort of peak out towards the end of 2021 this year, and then maybe taper off. There's people that argue that it will be a kind of a hyper cycle where we won't get the big pullback anymore. I think that I wouldn't want to pick a number, but I think it'll be well in excess of 100K.
Okay, and of all the coins that are actually in existence right now that people are talking about today, what will be, I'm not going to say non-existence, but what will be irrelevant? And everybody's talking about right now, a year from now.
Doge.
Yeah, 100%. 100% I agree with you on that. So anyhow, Jim, I can't thank you enough for actually coming on today. This conversation is, every time I talk to you, my jaw drops, and I feel like I'm Kane from Kung Fu, and you're the blind guy saying, "Yeah, you're not ready to walk the rice papers." I learned so much from you. I'm really, really grateful that you made your time and you're available, and I'm definitely going to have you back on. And if you decide that it's not a good idea, I'll show up at your house with a wrench, and I'll compel you to keep talking. So anyhow, the first thing I want
I just like to say you've been a great friend and over a lot of years, and I enjoy just spitballing this stuff with you. We do this all the time.
Freak.
What's that?
Freak.
Yeah, freak.
Yeah. Explain to
I'm that crazy guy, or I used to be that crazy guy at the dinner party or whatever, Thanksgiving dinner, talking about Bitcoin. And it's amazing how few people actually are willing to look behind the curtain a little bit, because it's so easy to discount Bitcoin when you first look at it. And David was one of those 1 in 100 people that when I told him about it, because it's something you have to grab yourself. You can't just have somebody hand it to you. When I first told him about it, David just, it wasn't long afterwards. He was like, "Dude, this is freaking awesome."
Yeah, no, it was 7 minutes into the call. I was getting one.
Right.
7 minutes into the call. So, the thing about it is so Jim and I, when we actually speak to one another in my phone, right, I say, hey, Siri, call Freak, right? And Siri will say, calling Uncle Jim, right? And so anyhow, so explain why we call each other Freak and in the community and why that's a thing.
Yeah, so one of my favorite podcasts is Tales from the Crypt and the Rabbit Hole Recap. And it's run by these two guys, Marty Bent and Matt Odell. And they call all of their plebes or plebs, they call them freaks. So, hey, freak. So all these Bitcoiners are now freaks. So David and I started calling each other freaks. And Uncle Jim is the guy that, he coaches the rest of his family on how to not get crushed in scams and that kind of thing. So I'm Uncle Jim and we're both freaks.
It's been great. So I just want to talk to the audience a little bit. So, I'm David James, the Job Whisperer, and my co-host was kind of silent today, Dave Hampton.
I'm just listening to the conversation.
Yeah, you're a great listener. I can learn a lot from you. And he's the robo-recruiter because he's relentless.
Yeah.
And so if you're looking for a job in crypto, right, find me at thebtcrecruiter.com. Right, and if you've got a project or you need candidates, you can go to blockchainrecruiters.net, blockchainrecruiters.net. So I want to thank Travis, my engineer. I want to thank Dave, my co-host. I want to thank Uncle Jim for coming on. And I'm David James, the Job Whisperer. Get whispered.